You might have read this news multiple times. How do you react to it? Do you panic? To me, this is the most nonsensical piece of news I read. And to be honest, I always feel as if the news company had no other news to post, so they just posted this one. Let me explain why. If this is the first video that you're watching of this channel, I would highly recommend you to go back to the channel and you'll find a playlist called Investing 101. I am not posting videos randomly. I am teaching you investing in a story-like format. Every single video is in an order. So if you watch these videos in a sequential order, it will help you learn so much more about investing. So go back to the channel, click on Investing 101 and watch the videos in series. We started with why should you invest, where we talked about inflation and compounding, why this eats up your money, basically inflation, and how compounding works. Then we moved on and understood all the investment options that we have in the market. That ranges from debt, then real estate, then gold, then equity and cryptocurrencies. The risks and benefits in each of them, the returns that you can expect, and how a beginner should start exploring these options, which eventually led us to the natural step, which is understanding mutual funds. An investment option where you can earn a lot of money and has very limited risk. And then we covered mutual funds in 3 videos. We understood what are mutual funds, what are different types of mutual funds, and then the risks and benefits of a mutual fund. Then we went ahead and understood a 6-step framework on how to choose a perfect mutual fund, and then my favorite mutual fund, the fund where I'm investing a lot of money and that would at least add a few crores to my wealth in the next few years. Now, after you understand debt and mutual fund, the next step is understanding stock market, the place where you can double your money in 21 days, right? Wrong, completely wrong. Let's understand it from the beginning. See, we will soon reach a place where I will make videos around top 5 stocks in 2024, the stocks where you should buy and forget, my favorite stocks. But please hold on. What if I can't make these videos after some time? Should that stop your investment journey? Never. It shouldn't. I want each one of you to acquire the skills so that you can pick your stocks and mutual funds yourself. To be honest, that would be my success, when you don't even need me to identify the stocks and mutual funds. Cool. Let's start this video. But before that, an extremely important announcement. As I mentioned before, we pick one lucky winner every single week from the comment section and we set up one-on-one call with that person. In that call, you can ask me as many questions as you want and you can also get your portfolio reviewed by me. So comment on this video and I might talk to you next. This video, we will majorly cover these things. We'll understand what is NSE, BSE, NIFTY, Sensex. Then we will use an example to understand everything. Then we'll move on and try to understand what exactly is inside NIFTY and Sensex. Then we will understand how to use it to make a lot of money. After that, I will tell you my favorite app that I use to basically track the markets, and I'll show you live how to actually analyze Nifty, Sensex and all those things. So stay tuned for that. This brings us to the first topic, which is what is Nifty and Sensex? These are stock market indices. And what is an index? It is basically an indicator of the overall performance of the market. Now, obviously, this might not have clarified you everything. So I'm going to use an example to explain everything. Now, if I ask you, what is your favorite restaurant in the city? You might say restaurant X is amazing and you should go there. The dessert is amazing of that restaurant and the starters are also amazing. Does that mean that you have tasted every single dessert and every single starter of that restaurant? Probably not, right? You just tasted the most popular dishes and based on that, you are thinking that this restaurant is pretty amazing. The food is amazing of that restaurant. That is exactly how indices work. Now, if I relate this with the stock market, the restaurant is a stock market exchange. Just like in a restaurant, you can place orders and eat. Similarly, in a stock market exchange, you can place orders and buy stocks. Then the second thing, in a restaurant, you ask for a menu so that you can order food items. Inside that menu, you will find Chinese, starters, main course, desserts and couple of other things. What are all these things? In a stock market, these are all the sectors. Even in stock market, every single stock that you can think of belong to a sector. It could be IT, it could be pharma, it could be FMCG, it could be automobiles and just like that. Now, every single dish that you see in the menu relates to a listed company, relates to a stock. For example, your paneer butter masala, your kadhai chicken, your gulab jamun is a stock in the stock market. And imagine there's one more option in this restaurant's menu which is a thali. And this thali, let's say, contains 30 most popular dishes of this restaurant. And you can order that, eat that, and you can assume based on that if the restaurant is really nice or not. And this thali is exactly Sensex. Sensex is also a list of top 30 companies in BSE. And based on their performance, you can evaluate if the market is performing well or not. But one quick thing, what if you taste this thali and the taste of this thali is not that amazing? Does that mean that every single dish of that restaurant is bad? Maybe or maybe not. And this is the exact reason why at some time Nifty might go up, but your portfolio that contains, let's say, small caps and mid caps and a couple of other stocks might just go down, or vice versa, where the Nifty goes down but your portfolio performs really well, because even when Nifty Sensex is not performing, even then your portfolio might perform. It is not an exact indicator, but it majorly goes in the same direction. So I've talked about exchanges in my example. So let's understand the exchanges in India. There are two major exchanges in India. One is BSE, the other one is NSE, Bombay Stock Exchange and National Stock Exchange. Both of them are in Mumbai. Now in BSE, it has 5,000 listed companies and NSE has 2,000 listed companies. Bombay Stock Exchange is an older exchange. It was established in 1875 and National Stock Exchange was established in 1992. Now the top 30 companies of Bombay Stock Exchange, it is called as Sensex, and NSE, the top 50 companies, they call it Nifty. Now these 30 and 50 top companies, there's a huge overlap here as well. A lot of companies overlap in Nifty and Sensex as well. And BSE uses Sensex to evaluate the performance of the market and NSE uses Nifty to evaluate the performance of the market. Now I have mentioned top companies multiple times. So what is top company? How do you find top companies? To explain that, I would take a step back and explain you one concept which is called as free float market capitalization. Now don't get scared, it's a very simple thing to understand. Let's understand it step by step. What is market capitalization? It is basically price of one share into the number of shares that you have. For example, let's say HDFC Bank, the price of share is 1500, let's assume, and the number of shares that are available to trade, they are 1000. So 1500 into 1000, which is 15 lakhs. So 15 lakhs is the market capitalization of HDFC Bank. I'm taking an example. This is not the reality. Now, as I said, it is not just market capitalization. It is free float market capitalization. So what is this free float? This basically means number of shares that are available to trade, open market shares that you and I can buy, because it could be possible that there are 1000 shares of HDFC Bank, but out of those 1000, 500 are reserved by promoters. They own it or government owns it. So only 500 are available to be traded in the market. So those are open market shares, which brings down the market capitalization to 500 into 1500, which is like 7.5 lakh. That becomes the market capitalization of HDFC Bank. Now, as I said, BSE has 5,000 companies. So you find out the free float market capitalization for all 5,000 companies, sort them in descending order. In the top 30 companies, that group is called Sensex. Similarly, in Nifty, it has 2,000 listed companies. So again, you find free float market capitalization, they sort them in descending order. The top 50 companies, that group will be called as Nifty. This is how you evaluate Nifty and Sensex. Now, how can you make a lot of money using this? Read this news first. What does this mean? This basically means that most of the portfolio managers are not even able to beat the index, which basically means that we can make a lot of money if we invest in an index. And how do we invest in an index? Index funds. We talked about this in the older video. So if you invest in an index fund, that basically means the portfolio manager does not have to buy stocks individually for you. He can just copy the stocks that are in the index, and hence the expense ratio is really low. So over a long period of time, you'll make a lot of money because you'll save on all those commissions. And hence, if you have just started out, or in fact, if you're a seasoned investor, invest a lot of money in index funds. Now you might be wondering that, can I actually see what exactly is inside Nifty and Sensex right now? What stocks are there? You absolutely can. For that, I will take you to my favorite app, which I use to just have a look at the market. That is called MoneyControl. If I go to MoneyControl, on the top you will see indices. Under that you will see Indian indices. If I click on Indian indices, then you can see all the Indian indices, where you'll have Nifty 50, Nifty Bank, and all those indices that we have. The key indices. You would also see Nifty Next 50. Remember when I said sort this in descending or top 50 companies is called Nifty? So 51 to 100, the next 50 companies, they are called as Nifty Next 50. If I scroll down a bit, I can also see sectoral indices. I can see Nifty Auto, which is Nifty Automobiles, all the automobiles company in India, Nifty IT, which is all the IT companies like Wipro, Infosys, and then Nifty PSU Bank, Nifty FMCG, Nifty Metal, all those companies belong to that particular sector. Now, if I go up again and click on Nifty 50, then this will open up the chart of Nifty, and then once this is loaded, I can scroll a bit and I can see stocks. If I click on stocks, I can see the exact 50 stocks that are right now in Nifty. Top 50 companies of NSE right now, and this can change obviously. If a company is not performing well, the price of the share falls, the market capitalization would just fall, and then some other stock would come under Nifty. As of now, you can see all these stocks are a part of Nifty 50, so you can have a look at this and also have a look at Sensex 30, all those 30 shares, and find out how many are overlapping and what are the extra shares in Nifty. That's your homework for today. Now, if you think that this video provided you some value, please share it with more people so that they also understand the key concepts, and consider subscribing to the channel if you want to understand more about the stock market. Now, I'll say it again, I am not posting videos randomly. All these videos are a part of Investing 101 playlist. If you have not watched it, please go back to the channel, click on that and watch all the videos serially. That will give you the maximum value. And also, if you have not commented on the video, please comment and I might pick you where we can have 101 call and you can ask me as many questions and also get your portfolio reviewed by me. Until then, keep investing in your dreams. Thank you.